So, today we are going to discuss a very important topic, which is considering the tax evasion, black money, and how black money was being generated in India because of the use of certain transactions connected to agricultural lands. And at the same time, there is a very interesting case which has come up in the Income Tax Appellate Tribunal, which may change and which can have a 360 degrees turn in these type of transactions which are connected to the evasion of income tax and which can actually convert black money into white. So we are going to take into consideration the methods that were used by earlier for tax evasion and how these probably can be blocked because of this particular decision of the ITAT, and at the same time, if it holds and if stands its ground in high court also, it will be a big change and a makeover in the tax landscape of India, and at the same time in the plugging of loophole which connects to conversion of black money to white. So let's take a look at the things that were happening. Now this is connected to tax evasion through farmlands and how income tax is taking action on it. So this is what is the case that we are going to discuss today. The first thing that we need to understand is that the loopholes are there in under the head of farms and farmlands and agricultural land. So in the name of agricultural land, in the name of these kind of transactions that are happening in India, what has been happening time and again is basically they are using it for the purpose of flipping of cash. In such transactions, what people do is they buy agricultural land, and this particular land becomes a source of evading income tax and converting the black money into white. Now, who are these people who use this? Basically, politicians, film stars, businessmen, and many others who basically want to convert their black money into white. Now, what things were happening earlier, we're going to take a look at that first, and then we will understand how these could be plugged, these loopholes can be plugged by the decision of the Income Tax Appellate Tribunal. So, how are people evading the tax? Now, let's take a process flow understanding with an example. If you buy agricultural land which has a market value of, let's say, 1.5 crore, okay, market value. So it's not the registration and the agreement value, it is the market value, which is 1.5 crores. What happens is the person he does is the person who buys this particular land makes an agreement of only, let's say, 25 lakhs, and they pay that by way of bank, okay, bank transaction, check, or NEFT or whatever. So agreement value is only 25 lakhs, whereas the market value, when you go to sell the land immediately in the market, it can come up to 1.5 crores. So rest of the payment, whatever the payment is there of the differential amount, it could be even 1.5 crores of this 25 lakhs is basically taken out, and 1 crore 25 lakhs is paid in cash. Okay, so this payment is made through black money, and when the land agreement takes place, it is basically in the hands of the person who has been holding that black money earlier, who has paid off that black money in cash to the farmer or to the person who was selling the land. Now, this person can use that cash for genuine, authentic purposes. Maybe he had some loans, he can pay it off, he can buy seeds, he can use it to pay the labor. So, still, cash market in India and the villages and other places is quite high. So, it can be used that way. Then, the entire now next step, how to make this how these people use this 25 lakhs worth of agreement value of agricultural land to actually generate 1.5 crores of white cash. Now you would say that the cash is already paid off, the black money is already paid off, yes, but how to get that into your account now, right? It's gone in the form of cash. Now this cash is out in the market, but I want to get that cash in the account. So how that was done earlier, people used to sell this land. Now this agricultural land which was bought earlier at 25 lakhs now is sold at 1.5 crore, which is the actual value of that land. So 1 crore 50 lakhs of cash or the amount comes into the seller's account in the bank, right? Total value comes in the account. So obviously the entire value which was earlier in black, that is 1 crore 25 lakhs, now comes in the account in the form of white money. Now you would say where basically there could be taxes, right? You're selling a property and the differential amount comes under capital gains tax. This would be the question that comes to your mind. But no, there are tax benefits which are connected to agricultural land, because agricultural land is exempt under the Income Tax Act. So it does not come in the ambit of capital gains tax. So what happens when you buy the agricultural land and when you sell it off, no matter what the valuation is, the entire differential amount of profit that you get on agricultural land sale, the gain that you get is exempt, because it does not come in the definition of the capital asset, and it is basically rural agricultural land is exempt from capital gains tax. So even when the land is brought below the ready reckoner price and sold at the ready reckoner price or even above that, there is no question of tax. So entire value of black money was getting converted into white cash with the help of this particular loophole of agricultural land. So, what are the recent amendments and rulings that have taken place in this case? It is basically connected to Ahmedabad bench of Income Tax Appellate Tribunal, which has stated, they have saying that okay, and they have endorsed capital gain tax exemption on the sale of agricultural land. They say okay, when you sell the agricultural land, no problem. There is exemption applicable on rural agricultural land, and that remains as it is. There is no issue, but they have pointed out to one important thing. They have questioned the first transaction of purchase which takes place. Now, in that case, we have seen that a valuation of the property was supposed to be 1.5 crore, but they are actually selling it. I mean, they are actually buying that particular property for only 25 lakhs. So the differential amount is paid in cash. So this particular part they have started questioning in this particular appeal case. So this particular part we will understand with the help of an example. So in that example, you'll see when you buy agricultural land, there will be obviously two values which exist. One value is connected to the government valuation, which is given for the purpose of stamp duty. So as per the ready reckoner, the government states that this will be the value of that particular land and you have to pay stamp duty on it. On the second part would be the agreement value. So whatever the ready reckoner value is, not necessarily the agreement value is the same. The agreement value could be less or more than that also. Now, what happens if the stamp duty valuation is, let's suppose, 20 crores, and you are actually making an agreement of only 2 crores, right? So, 20 crores is the basic stamp duty valuation. Agreement value is 2 crores. Now, there is a gap of this 18 crores. So, there is a gap in this particular deal of 20 crore. The gap is 18 crore, which was earlier ignored, right? So now what is happening, that is what we'll see. The first thing that the ITAT bench is stating, that there is a section 56 to 10, right, in the Income Tax Act, and this particular difference will fall in the ambit of this section. So 56 to 10, which is relating to the income from other sources and in terms of immovable property, specifically connected to immovable property. Now, this was made an amendment which was made in the financial year 2023. This is connected not directly to this valuation, but it is stating about gifts in terms of immovable property. Now, what would be the gifts in this case? The amount of differential value of property as stated by the stamp duty and registration authorities and the agreement value, this will be categorized as gifts, because its value that you are actually paying is quite less than the actual value of that property. So income tax assumes that the remainder amount is gifted. Okay, so that's the trick, and this is the twist that has happened in this particular case. So what is stated about gifts to unrelated party? Now where there is relatives, blood relations are involved and relatives are involved, then there is no amount or there is no cap on the gifts that have been paid. But if it is unrelated party, that means there is no relative kind of categorization between these two persons, then the gifts above 50,000 will be taxed. So obviously this differential amount of 18 crores which was existing, where you made a valuation of 20 crores as per stamp duty, but only 2 crores was the agreement value. That 18 crores falls in the ambit of gifts. Under which section? Under this section of 56 to 10. So now what will happen with this section coming into force? This 18 crores will be considered as income from other sources. It will not fall in the head of capital gains, or it will not be charged under capital gains tax, but it will be charged under the ambit of income from other sources. So immediate effect will be that whatever the black money was being converted into white money via this transaction, where cash was paid off for the value of the land, will be obviously coming in the ambit of gifts, and you have to pay tax on it, and that tax is not paid at the rate of capital gains, that is 12.5% long term gains, but it is paid in terms of what? The normal slab rate. So whatever the slab rate that is applicable in income tax, you will have to pay taxes based on that. So this amount will be added to your income completely, the differential amount, because it is considered as the amount of gift. There is again a bit of problem here, because immovable property, they are saying, will fall in the definition under this particular head of 56 to 10. But what is immovable property, they have not defined. So that's why the income tax appellate tribunal has taken the advantage, and they're saying that 56 to 10 does not define what is in immovable property. So immovable property could also be rural agricultural land, right? Because there's no clarity, so we add that also from our end. Now obvious state is that this case will not end at that particular Allahabad ITAT, but it will go to the High Court. Now the question is, will the High Court take a stand in the favor of income tax, or will it favor the assessee? This is where the real game changer will be. So if High Court says no, you have to pay tax on this entire differential amount under income tax, income from other sources, then yes, this will be a big milestone in the income tax history, because it will be like a plugging in of the big loophole which is going on around us in terms of agricultural land purchase and sale, where tax avoidance is there, plus there is conversion of black money into white. So, if let's hope that the High Court also upholds this particular view of what ITAT has said, and it says that yes, this amount should be brought in the ambit of taxation under income from other sources, then obvious effect will be there will be no more buying and selling of agricultural land for the purpose of these bribes, or any kind of cash payments or any other black money sources. So it will be a good game, a good changeover that can happen in the landscape of income tax in India, and taxation will be more transparent. So let's see what the High Court takes a decision. Let's wait for it and see how the things change or don't change. They are in favor of assessees still, who are taking the advantage of this these sections, or will it favor the actual income tax, where income tax wants to bring this in the ambit of taxation? So that time will be stating of what will happen. What are your views on this particular stand? So what do you think? Should the High Court take the stand and bring this particular valuation and this particular differential amount under the ambit of taxation or not? What is your viewpoint on it? Let's hear it from you in the comment section. On Commerce Gyan, I will be sharing with you many such interesting things ahead also, and it will be related to commerce, industry, in relation to investments, income tax, different changes in the different laws that take place, economics, and many practical oriented case studies that we see around us in terms of commerce and industry. So for this will be useful for students and people who are actually even in the business, who want to gain knowledge on this subject. So just in case you have not yet subscribed to Commerce Gyan, do subscribe to this channel, and keep watching the videos, and hope to see you in the next video of Commerce Gyan. Thank you.